Okay, I'd like to welcome everyone to the webinar, the myEcon Personal Finance Success Company webinar and conference call. I'm TC Chambers, Executive Vice President and Cash Flow Strategist with myEcon, and I'll be your presenter. You know, I first want to talk a little bit about the name of the company, myEcon, and that's short for My Economy. And you know, the reason we named the company myEcon is because we want people to focus on their own personal economies and spend less time worrying about, you know, that which they can't control, either the U.S. economy, which you can't control, or your state or local economy, which you can't control, and definitely not the UK or the Russian economy. So having said that, that would make you the CEO of your economy, thus solely responsible for your economic success. And I won't say failure, because I want to challenge you to take on the mentality that success is the only option. I want you to take on the mentality of the glass half full. So you're always looking to progress. You're always looking for solutions. You're always looking for the way to win. So myEcon is short for My Economy, stating that you, the person looking in the mirror, who you're looking at, is the CEO and solely responsible for your economic success. Now, the bottom of this page says the Personal Financial Success Company. And that's what we've done. We've helped thousands of individuals and families first shift their mindset, then modify their financial habits, and ultimately improving their personal finances. So I'm challenging everyone on the call tonight to accept that role, that title of CEO of your economy. Now, let's take a little bit of time and talk a little bit about the company itself. So myEcon is a 13-year-old debt-free, technology-driven company headquartered in Atlanta, Georgia. And in the past several years, we've empowered our associates. We've helped our associates put an additional $400 million of cash flow back into their households. And as I go through, I'm going to show you all these ways that we've helped them shift cash flow back into their households. Now, let's go a little further. See, our company's mission is very simple but powerful, and that's to educate and empower people to improve their personal finances. Now, if you would ask 10 people for a definition of personal financial success, you'd probably get 10 different answers. So for the purpose of this overview, this is the definition we're working with. Personal financial success is simply having enough cash flow to support our lifestyles now during our working years and during our retirement, or what we sometimes refer as financial freedom years. Now, what's important to note that the source of income for those periods are uniquely different. See, during our working years, our income typically comes from the labor we put into our jobs or our businesses, or a combination of both. However, during our retirement or financial freedom years, the income has to come from assets. It has to come from those assets that we've taken time to build or grow: stocks, bonds, annuities, retirement accounts, i.e. those 401ks, 403bs, TSPs, real estate, also residual-based businesses. So all those things we had to buy, grow, that ultimately will give us the passive income we need to be able to maintain our lifestyles. Now, what's important to note is what happens between the lines, and from the lines of our working years to our retirement years. And typically what happens is, you know, you'll hear people talking about retirement, and you'll hear the target that they're shooting for. They'll say things like 65 or 67. They're talking about age. Well, guess what? That's the wrong target. How do we know? Because we have people hit 65 and 67, and they still could not retire. They still cannot retire. Then you hear talking about time frames. Well, by 2015, by 2018. Well, wrong target, because when 2015 came, they couldn't retire. 2017 came, they couldn't retire. 2018 is here right now, and they still can't retire. That just means they were pointing and aiming at the wrong target. So we have to have the conversation about what is the correct target. And the correct target has to be a financial amount. How much money do you need to have in your portfolio? In our example tonight, we're going to use $1.25 million, $1,250,000 in that portfolio. If it's yielding you 8%, it will pay you $100,000 a year. Now, I'm not going to talk about $30,000 a year at retirement or $50,000 a year in retirement. Why? Because we're in the wealthiest country in the world, and the bar needs to be a little higher than that. So $1.2 million 1.25 million at 8% will pay $100,000 a year. Now, unfortunately, millions of Americans won't be able to hit that target either. And the reason being is because they are using a flawed strategy. See, before the strategy might have worked, but today it does not work. The strategy is this. We're told, and we continue to tell our children this same thing and our grandchildren this same thing, is to go to school, get an education. Now, that first part is good because you can't ever stop learning. But then they're told to use that education to then get themselves a good job, work hard in their job, use some of the money they make on their job to invest in their retirement accounts. Well, what that is saying is that you'll be able to invest enough money in your retirement accounts, in other words, buy enough financial products to be able to set you free down the road. Now, unfortunately, for the poor and middle class, the typical W-2 employee, that's almost numerically impossible. Here's why. If the typical person had an extra $500 a month to put into their portfolio, or was investing $500 a month in their portfolio, if they did that for 20 years at 8%, they'd have $294,000. Now, although that is a large sum of money, it's not enough to walk away. In other words, let's say you have $300,000 in your account at 10%. That's $30,000 a year. Well, that's not enough. Why? Because at that point, they still have a mortgage. They still have 1 or 2 car notes in the house. They still have credit card debt. What's that $30,000 going to do to that? Nothing. So they still can't walk away. But now, to give you an idea, that strategy can work for someone who has significantly more money. See, the wealthy can buy their way to more wealth. Give an example. If someone could invest $5,000 a month for 20 years at 8%, now they have $2.9 million. So the typical person doesn't have enough invested into their 401k for that working career in order for it to accumulate to it enough. So they have to look at alternatives. We have to look at other ways to get that done. Again, because the masses can't buy enough financial products to get free. So let's take a look at America's place in the world when it comes to wealth. Because that's going to determine maybe it's not enough wealth here, and maybe that's why so many people aren't able to retire. When we take a look at that, we'll find that America is the wealthiest country in the world. $97 trillion of wealth here in America. It accounts for about 25% of all the world's wealth. The U.S. is the home of 540 billionaires and 10 million millionaires. That just means there's not a shortage of money. So the reason millions of Americans aren't retiring has nothing to do with there being a shortage of money, because there is not a shortage of money. The reason millions of Americans are not retiring and they don't have the type of money they want to have is because they're using a flawed strategy. So let's talk about a little more about the picture here in America. See, this is how we know the strategy is flawed, or how so many people are not getting there, because 80% of Americans are struggling financially. Now, we have to put struggle into perspective, because we were talking about someone that made $30,000 a year, spending $34,000 a year, living paycheck to paycheck, using a credit card to make up the difference. Most people would agree that that's a struggle. But if we were talking about somebody that made $100,000 a year, spending $110,000, $115,000, using credit cards to make up the difference, but they drive a foreign car. They spend $200, $2,500 a month on a condo on the beach. They're out having sushi at happy hours once or twice a week. You see them on Facebook. They got nice clothes, nice shoes, Gucci belt. They're taking trips a lot. You wouldn't categorize those folks as struggling. However, I maintain paycheck to paycheck is a struggle. If you're spending all and more of what you have coming in, that's a struggle, and it's easy to see how 69% of the masses have less than $1,000 in savings. It's easy to see how only 4% of the poor middle class, 4% of the masses ever obtain financial success or ever can retire and walk away. Why? Why in the wealthiest country in the world are so many people struggling financially? 2 reasons. 1, strategy. It's the strategy that they're using. And more specifically, it's the strategy that they're using to address the 4 major obstacles to financial success here in America. Now, see, what you have to understand is everyone faces these obstacles here. the wealthy, the poor, and the middle class. They all have to address these obstacles, but they're using different strategies. Let's take a look at the obstacles. All right, the first one, limited income and inflation. See, inflation grows at 2 to 3% a year. How does that affect the typical W-2 employee? Well, I'm sure many of you would agree that most W-2 employees don't get a 2 to 3% pay raise every year. So that means each year when groceries go up, when gasoline goes up, when utilities go up, when the cost of goods and services go up, childcare go up, education go up. It goes up for everyone, but because the W-2 employees' pay didn't go up, they now have to spend more money for the same thing. So they have less buying power. Whereas if you take a look at the wealthy, most of them are business owners. So in order to keep up with inflation, two things. One, the money that they have invested grows faster than inflation. And two, they have businesses. So all they have to do is raise their prices above inflation. If inflation grows at 3%, they raise their prices 5 to 7. So they outpace inflation. Now, the second obstacle, high taxes. The typical W-2 employee loses a third of their income even before they get their money. So they have less buying power because of inflation, and now a third of their money is gone. Well, if you look at the wealthy, many of them have businesses. So the IRS says, hey, if you have a business, then one, you get all your money first, spend it, and then get deductions for your lifestyle that lowers your taxable income, thus saving you on taxes, whereas the W-2 employee has very few. That's even more evident with these new tax changes. And we'll talk about that a little more. But bottom line, these first two obstacles take so much cash. In order for that person to keep up, they now have to use their credit cards. So that person that's making $100,000 a year, they're basing their lifestyle off $100,000. But because taxes take a third of it, they're living off of, they only have $70 coming in. In order to make up the difference, they now have to put their groceries on the credit card, their utilities on the credit card, their entertainment on the credit card, their gasoline on the credit card. Now that creates thousands of dollars of interest that they pay every year. Now, these first three obstacles take up so much of the cash, there's little to no money to invest for savings, to put in for savings and investing. So what's that mean? That means they don't have the $5,000 they need to invest at 8% for 20 years to have $2.9 million. Some don't even have the $500 a month to invest for 20 years at 8% to have $300,000. So these obstacles have to be addressed. So you have to put a strategy together to be able to overcome these obstacles. Now, in myEcon, what we've done is we said, look, here's the solution for the masses to be able to overcome these obstacles. Here's how we've helped our associates begin to overcome these obstacles. One, they need more cash flow. So they have to have more cash flow coming in to help outpace inflation. They have to have more cash flow coming in to be able to use for lifestyle, to be able to pay down debt. So in myEcon, what we use is a strategy called income shifting, which gives our associates the ability to generate cash flow in 5 ways. These 5 ways are correct tax withholdings, minimize taxes, generate business income, debt elimination, and investing to build passive income. So now what we're going to do is we're going to take a look at each one of these briefly to see exactly how income shifting is working through these different cash flow streams here. So first one, correct tax withholdings. We know that this is extremely important. We call this the fun one because mostly every W-2 employee can do this. See, the IRS says that 80% of all employees have too much money withheld from their paycheck for taxes. How do they know? Because in 2016, the IRS said that 83% of filers got refunds. That means they had too much money withheld all year, and IRS had to refund it to them. Now, as a result of that refund, what really that means is that employees lost money. People say, well, what do you mean they lost money? Well, they got that money back from the IRS, which IRS held for up to 14 to 15 months, interest-free. So think about it. If you're a homeowner, you pay interest on your mortgage. If you bought a car, you pay interest on your car loan. If you have credit cards, you pay interest on your credit card balances. If you went to college and you borrowed money, you pay interest on your college loan. So how can it be that everyone that gives you money, you get money from, charging you interest, but you loan your money out to the IRS interest-free for your entire working career, never earning a dime of interest off of that money. That's financial suicide. So you have to maximize that take-home pay. And it's okay that millions of people don't know how to do that. Because guess what? That's what we teach the masses how to do. How do you properly correct your W-4 so you keep more of your dollars? That's the first cash flow stream, correcting the tax withholdings. The second cash flow stream is minimizing taxes. See, now it's time to have frank and direct conversations with the CEOs I have on this phone here. Now, minimizing taxes. See, what the IRS says is this. Let's assume that everyone on this phone here has a vehicle. The IRS says if you have a vehicle and you use your vehicle to help you build a business, the expenses you incur, a percentage of the expenses you incur for that vehicle now become tax deductible. So, tomorrow and the rest of 2018, every time you drive your vehicle and you do not have a business, just accept the fact that you are losing money because you have no way of making your miles, your gasoline, your tolls, interest off of your mortgage, interest off your car loan, tax deductible, lease payment, tax deductible. But the IRS says if you're a business owner, you can. Let's assume everyone on this phone here are CEOs and you have a cell phone. The IRS says that if you have a business now, a percentage of your cell phone bill can now be tax deductible. So going forward from tonight forward through the rest of 2018, as long as you have a cell phone and do not have a business, accept the fact as the CEO of your economy that you are making a conscious decision to leave money on the table. Travel. The IRS says if you travel during the course of 2018 and you have a business, if you attempt to do business during the course of that travel, then a percentage of that travel can be tax deductible. So, from tonight going forward all the way to December 31st of 2018, if you incur any travel expenses and you as the CEO of your economy do not have a business, you have accepted the fact that you are going to leave money on the table and lose tax savings. The IRS says if you are a parent and you have a business, you can pay your children wages for helping you in the business. Those wages are 100% tax deductible. So you can pay your children up to $12,000 a year, each child. They pay no taxes on it, and you get a 100% tax deduction on it. And now, the food you were buying for them, the groceries, the clothes you were buying for them, the karate classes, the daycare, the private school, the trips with their friends, all the money you were spending on them before anyway can become tax deductible. So from now to the rest of 2018, December 31st, if you're a parent and you spend money on your children and you do not have a business, as the CEO of your economy, you are accepting the fact that you are leaving dollars on the table when you don't have to. See, so business owners have hundreds of deductions that they have access to. But it's up to you whether you decided to take advantage of it. Now, it's okay if you don't know how, because we're going to teach you. There are millions of Americans that don't know how, and that's why we started this company, to be able to teach them. How do you make your lifestyle tax deductible? That's cash flow strategy, cash flow stream number 2. Let's take a look at cash flow stream number 3, business income. So now, we help people start businesses to start a for-profit business, to make a 3-figure, 4-figure, 5-figure, 6-figure income in business. So we didn't help them start just to save on taxes because the tax savings isn't enough. So what you say, $500, $600 a month on your taxes? Well, you remember, $500 a month at 8% for 20 years is only $294,000. That's not enough walk-away money. But you also remember $5,000 a month at 8% for 20 years is $2.9 million. So we need to have you make thousands more from your business, so you have thousands of more working for you on a monthly basis to go towards you hitting retirement. Now, We're going to provide you with a world-class business system. Our core product is our income shifting membership. Now, our income shifting membership is centered around financial literacy. It's centered around education. So first and foremost, we're in the education business. So we now shift dollars from education or educational dollars back into our associates' pocket. What do I mean by that? See, all of you on this phone, you know someone that has spent hundreds of dollars to take real estate course so they can get a real estate license. Hundreds of dollars on a mortgage broker course so they can become a mortgage broker. Hundreds of dollars for insurance class so they can get an insurance license. Why? Because they wanted to learn something specific to those disciplines to give them ability to make some additional money. Well, our income shifting membership teaches people what they need to know specifically about finance and money, specific about income shifting, shifting valuable dollars back into their household. Now, contained in that membership is one of our products called the income shifting strategy itself. That is the how. See, that's how we teach people to shift those dollars back into their paycheck. That's where we teach people in that strategy how to correct their W-4, how to change their lifestyle expenses into business tax deductible expenses. That's how we do that. Next is our cash flow manager software. See, the cash flow manager software is significant because this is how we keep our associates IRS compliant. See, the IRS says you have two requirements in order to be able to maintain these deductions throughout the year, to qualify for them and maintain them. One, you need to operate your business with a profit intent. Now, how will they know? Because the second requirement requires you to keep good records. So by them reviewing your records, they're able to see your activity. So our cash flow manager software allows you from the convenience of your cell phone, your tablet, or your computer to keep meticulous records about your income, about your expenses. And now if ever asked, you're able to show it. You take digital images of the receipt. So no more concern about losing receipts. No more concern about receipts fading. You also put the vital information, who, what, when, where, and why. Now you're compliant. Also in there is ID theft protection. Why? Because identity theft is $1 billion industry and we got to put a layer of protection in there for you. Free and discount legal services. Because why? We need to sometimes ask some smart people some legal questions that we do not know to help protect us. Next in there is our smart money credit system. See, our smart money credit system is very important. See, it's our credit education system. See, we educate you on how credit works, how to repair it, how to build it, how to sustain it. See, education does that, not fixing it. See, if we fixed it for you, you wouldn't know how to sustain it, how to grow it, how to build it, how to keep from making the financial mistakes that cause millions to have bad credit in the first place. We also have discount travel and corporate perks. So we have all of these products and services bundled together for our associates. So that's what we do for our associates. Now, the income shifting membership, like I said, is for our associates. However, we have a phenomenal retail strategy for our amazing selection of products. Now, the previous slide talked about how we shifted educational dollars back into our associates' households, back into their pockets. Well, our retail strategy is how we shift consumer dollars back into our households, back into our distributors' pockets. Now, this is very important because let me give you the bottom line up front. Just give you one number on one particular day so you'll really feel me and understand why this is a vital part of our strategy. On February 14th, 2017, that's Valentine's Day, Americans spent $18.2 billion with a B in one day on Valentine-related products and goods. $18.2 billion was shifted into somebody's pocket, somebody's household. It wasn't employees' households and pockets. It was business owners' households and pockets. So it's important to not only be in business, but to understand that you have to have the ability to be in multiple industries simultaneously. In other words, distribution is king. That's how you win. You look at McDonald's. They sell more burgers than anybody else because they have distribution. Walmart dominates the industry because they have distribution. So by us focusing on educating the masses, shifting educational dollars back into your household, putting people in a position where they can improve their finances as well, you create distribution. Now, we have phenomenal products. We have ID theft protection. Wouldn't you want to get a piece of $1 billion industry? We have our smart money credit system that to be able to. These products are listed on your website and every associate's website. You don't stockpile any of that. They go, they read about it, they purchase, they receive, you receive commission. The cash flow management software. See, there are realtors, insurance agents, mortgage brokers, independent contractors, small business owners. They all need a way in a user-friendly environment to be able to keep track of their income, keep track of their expenses. Book travel. There's people traveling all the time. They go to online to travel all the time. You need to have an online presence where they can go to your site, book a ticket, and you get paid. Now, I didn't say call you and ask you to put together a travel itinerary. No, I said go to your site, click on the icon, book a ticket, and you get paid. People want to buy nutrition. That don't mean they got to call you and you got to go in your garage. They just got to go know that you have access to those products via your site. They go to your site, they buy, you get commission. Cashback Mall. Your mall has 1,000 stores. Walmart, Macy's, Best Buy, BrandsMart. Guess what? It has stores that sells flowers and chocolate. On February 14th, they're going to spend billions again on all these things related to Valentine's Day. You need to have a presence so they can go to your site in order to flowers. Go to your site and order the teddy bears. Go to your site and order the chocolate. Distribution is king. He or she with the most outlets wins. Let's talk about how we create distribution. See, this is how we create distribution. We focus on educating and empower others to income shift. See, every time you help someone income shift, you create distribution. Now, if you look at the top left box, it talks about our first leadership position, which is executive vice president. See, once you've helped two people position themselves to income shift, you're now promoted to executive vice president. Now, as executive vice president, if you look over to the right, that now means every time retail dollars are shifted to your website, you get 100% of all the personal sales commission vial. You also get 85% of the commissionable sales that's shifted to your teammates' websites. So when retail dollars are shifted from other vendors' websites into your team's websites, you get up to 85% commission on that. Now, why do you build a team? Because distribution is key. You want to get 1,000 outlets yourself, or you want to build a team to help you get to 1,000 outlets? And now you get commission on all of them. See, building wealth is a team sport. There's not a single person, I promise you, you can identify that's built wealth, that's reached financial success, that did it on their own. So success leaves clues. If all these people that have reached levels of financial success that we aspire to have done it with a team, then we should follow that success. Now, you're compensated as you're building this distribution. That's your incentive to create distribution. Now, you never have to, because you can benefit off all the strategies without ever building a team. It's just hard to accumulate the volume to give you the dollars you need. So let's look at the bottom left part of that pie. Every time you refer someone to one of our income shifting memberships, they pay $34.95 to get a membership. The company pays you $35 commission, 100% commission. Now, that person on your team, they provide someone with an income shifting membership, refer someone to it, the company pays you $25 referral for that. So you get unlimited 35 for what you do personally, unlimited 25 for what those in your base shop do. You have the ability to get paid for creating distribution, what you do personally, as well as your team. Now, while you're that, you're building residual income, because not only do you get paid up front as you're creating distribution, Every time there are additional sales going through those outlets, you get residual income. Every active associate, in other words, every time someone pays their $34.95 to keep their business active so they can income shift, the company pays you residual income on that. So how about earning $5 to $10 monthly on every active associate in your organization? So creating distribution, getting compensated for creating distribution, driving retail dollars, shifting those dollars to your website, getting compensated for that, building that residual income, that 4-figure, 5-figure, 6-figure income is the third cash flow stream. Now, let's go on to the fourth cash flow stream is debt elimination. So we're going to take some of that money from the first three cash flow streams and we're going to apply it to debt. And we're going to rapidly eliminate debt doing this strategy. We call this debt stacking. Some people call it snowballing. So now we're going to take $1,000. Now you see here there's a car note. There's a $17,000 balance. The car payment is $545. We add the $1,000 to it. We send $1,545 to the bank, and in 12 months, the car is paid off. Now we take the entire $1,545 and we add it to a Visa payment of $200 a month. Now the Visa balance is $8,000. It would typically take 78 months to pay that off, just paying the minimum payment of $200 a month. Instead, we send $1,745 to the bank, the normal $200 payment, plus the $1,545 that we freed up after we paid the car off. In 5 months, the Visa card is paid off. And that's $1,745 we now freed up to continue in our debt stacking. Well, there's a mortgage of $450,000. The mortgage payment is $2,800. Well, we add the $1,745 to that, and the new payment will actually be $4,545. We send $4,545 to the bank 100 months later. Now the mortgage is paid off. You are totally debt-free. Now, it took 117 months to pay off $475,000 of debt. Well, guess what? In that same amount of time, because you debt stacked, because you use a strategy to get more cash flow to pay this debt off earlier, you actually saved over $700,000 of interest payments by paying it off early. Now, more importantly, you're debt-free with $4,545 of cash flow to be able to use now towards the fifth and final strategy, which is building passive income. See, this is the fun one. This is when you take your cash, create an asset that gives you more cash. Cash, asset, cash. Now, in this example of income shifting, we're investing at $4,500 a month at 8% for 10 years. You'd have over $800,000 in 15 years, over $1.5 million. That's using strategy. See, strategy got you more cash. You paid off some debt, got you some more cash. That cash turned into an asset that got you some more cash. Now, some people aren't going to invest it. They don't want to use that. They don't want to use the market. They may want to do real estate. Well, okay. Every 6 months takes $27,000 of that and put it as a down payment on the rental property. And then every year, you done picked up 2 properties. 10 years, you got 20 properties. Even if you only got $250 of positive cash flow off each of those properties, that represents an extra $5,000 a month residual income. That's cash flow coming in passively that you don't have to work for. And if you can live your lifestyle within that $5,000 a month, you are free. So myEcon has put together a system to educate and empower people to take full control of their economics, to position them to obtain personal financial success. Now, $34.95 a month. That's the cost to do business. That's your operating expense. That's $1.17 a day. That gets you a personalized website. That gets you our world-class business system. That gets you our income shifting membership, which of course comes with our income shifting strategy, cash flow manager software, ID theft protection, free and discount legal services, our smart money credit system, valuable tax benefits, discount travel and corporate perks, all for just $34.95. See, remember, you're the CEO. $34.95 now says every time you move your vehicles, which you're going to do the rest of this year, every time you take Uber or Lyft, which you may do sometime during the course of this year, you can now position yourself to make those expenses partially tax deductible. See, as the CEO of your economy tonight, for $34.95, you can decide that that cell phone that you already have, that bill that you're already paying and you will pay for the rest of the year, you can make a percentage of it tax deductible, saving you tax dollars, keeping more money in your pocket. You can decide tonight that if you travel this year, it's going to be business travel. And now a percentage of that is now going to become tax deductible. If you're a parent, you're the CEO, you can decide tomorrow when you spend money on your children whether it's going to be tax deductible or not. See, Trump has nothing to do with the decision you're going to make tonight. State and local leadership have nothing to do with the decision that you are going to make tonight, that you are empowered to make tonight. It's all left up to you, Mr. or Miss CEO. So I'm going to put the line on question and answer mode. I'm going to open up for questions and answers, and we will get all your questions answered tonight so you can make an informed decision, yes or no. And then the person that invited you on this call, they're going to appreciate that. If the answer is yes, then we're going to plug you into our system and help you do all the things we talked about tonight. If their answer is no, we want to thank you for taking your time and getting on the call or getting on the webinar tonight. We're going to encourage you to go to their website, go to their product section, and maybe there's some things in there that you may see a benefit to you. Definitely, if you're a person that participates in Valentine's Day, we're going to ask you to go to their site, go to their mall, and purchase your flowers and chocolate from their site. So thank you for taking time out. Give me a second. I'm going to take this off of record, and then we're going to go ahead and put it into a question and answer mode. Give me 1 second.